So you see, the point I'm trying to make is that a lot of the Southern Hemisphere views us as being wholly hypocritical. And it's one thing to sanction and freeze assets. It's a whole nother thing to confiscate those assets. 5 billion of the 280 billion that they want to confiscate or they have frozen of the Russian assets are in the United States. They want to use those $5 billion in dollars to provide weapons to the Ukraine. The other 280 billion that's being floated around that will take the interest of those frozen treasuries, about 4 or 5 billion a year, and use those to rebuild the Ukraine and provide weapons against the country they are fighting. Now, I see a problem with this. Look, I'm an American patriot. I grew up in this country, and as I mentioned, the least likely character to have ever achieved the success. I thank God every day for this country and the opportunities it gave me. But the leaders of this country are doing some very dumb things, and in particular, signing an executive order to go green, undermining the hegemony of the dollar, weaponizing the dollar. And all of this really came to a head before all of this started when we left Afghanistan in a way that was very much un-American, leaving, 3,000 American people behind enemy lines and turning our back on the interpreters and the freedom fighters who we gave them a promise, we'll give you visas on the way out, and we didn't. This was not lost on the rest of the world because 2 days after that happened, Saudi Arabia signed a military protection agreement with Russia. Now, keep in mind, we've been protecting them for 50 years, and that's what's given us the dollar hegemony. They decided to do it with Russia. What else has Saudi Arabia done? Well, they have formally applied to the Shanghai Cooperation Organization, which is the largest regional military and financial organization on the planet. They've formally applied and have been admitted into the BRICS. They've told people in Davos that we're open to taking other currencies for oil. You can see things are breaking away from all of this. It took 200 years to create our first $1 trillion. We're doing it every 100 days. Every 100 days, we're adding $1 trillion in debt. We have a almost $35 trillion debt, but that doesn't take into account Medicare Part B, $99 trillion underfunded. Medicare Part D, the prescription, $22 trillion. Social Security, $77 trillion. Government and military pensions add up to about $150 or $60 trillion in the hole. And a trillion seconds ago, 31,688 years ago. Game's over. So it's bad enough we've done all of this stuff. We could probably figure out a way to get out of this. But, people look to the United States and have for a very long time as a beacon of liberty and justice and freedom, a shining light, if you will, right? Well, let's talk about that for a minute. How about the questions regarding our electoral process? I don't care what side of the aisle you're on. Is it fair? How about the judicial system? I don't care what side of the aisle you're on. Is it fair? Is there a two-tiered standard of justice? Is justice blind? How about the lawlessness in the cities, the open borders where 17 million people have entered this country illegally? 1% want to fuck with this country. That's 170,000 people. How about 5%? Well, you're getting up real high there. At 5%, you're talking, 800,000 people? That's bigger than any standing military. How about the fact that we've lost our bearing in terms of being woke, in terms of moving away from the nuclear family? All of these things that made this country great, people are looking at cross-eyed. And so if you really did want to lose the reserve status, as Jared Bernstein advocates for, the lead economic advisor to this country, well, let's see. Sign an executive order to go green, weaponize the dollar against Russia, against Iran, and no one in the world, let alone the Southern Hemisphere, will ever trust us again as we confiscate their assets in a hypocritical manner. And then we let this country lose its bearings, the borders, the cities, the lawlessness, the inflation, the two-tiered justice system, the questions surrounding the electoral system. All of this stuff makes people in this country say, what the hell is going on? And the rest of the world saying, this is our chance.
Andy Schectman delves deeper into the strategic missteps that have led to the current precarious position of the US dollar. He emphasizes that the US has historically been seen as a beacon of liberty and justice, but recent actions have significantly tarnished this image. The US withdrawal from Afghanistan, the weaponization of the dollar, and the push for green energy policies are just a few examples of decisions that have eroded international trust. Schectman highlights the critical role of oil in maintaining the dollar's hegemony. Following World War II, the Bretton Woods Agreement established the dollar as the world's reserve currency, backed by gold at a fixed rate of $35 per ounce. However, in 1971, President Nixon ended the gold standard, leading to the dollar being backed by nothing. To maintain its dominance, the U.S. struck a deal with Saudi Arabia in the early 1970s, ensuring that oil would be traded in dollars globally, creating a synthetic demand for the currency. This petrodollar system has been the cornerstone of the dollar's global dominance for the past 50 years. However, Schectman notes that this system is now under threat. Saudi Arabia, once a staunch ally and protector of the petrodollar, is shifting its alliances. The country has joined the Shanghai Cooperation Organization and BRICS, and has indicated its willingness to accept other currencies for oil transactions. This shift marks a significant move away from the dollar and signals a broader trend of de-dollarization. Schectman argues that the U.S.'s push for green energy policies further undermines the petrodollar system. By signing an executive order to go green, the U.S. is essentially signaling to oil-producing nations that their primary trading partner is moving away from fossil fuels. This move not only threatens the demand for oil, but also the demand for dollars used in global oil trade. Schectman also points out the irony in the U.S.'s financial strategies. While the country advocates for a green economy, it continues to weaponize the dollar and impose sanctions, further driving nations towards alternatives like gold. Countries are increasingly viewing gold as a stable and reliable store of value that lacks the counterparty risk associated with fiat currencies and debt instruments. This trend is particularly evident among major global players like China and Russia, who are systematically increasing their gold reserves while divesting from U.S. treasuries. The ramifications of these shifts are profound. As demand for the dollar declines, the U.S. could face significant economic challenges, including higher interest rates and increased borrowing costs. This would exacerbate the already precarious debt situation and could lead to a loss of the dollar's reserve currency status. Schectman emphasizes that this shift is not just about economics, but also about trust and perception. The U.S.'s actions, including the chaotic withdrawal from Afghanistan and the weaponization of its currency, have led other nations to question its reliability as a global leader. This erosion of trust is driving countries to seek alternatives that offer greater stability and security. In conclusion, Andy Schectman provides a comprehensive analysis of the strategic missteps that have led to the current challenges facing the U.S. dollar. He argues that the U.S.'s actions, both domestically and internationally, are driving a global shift towards gold and commodities as more stable stores of value. This trend reflects a broader loss of confidence in the U.S. financial system and a move towards a more diversified and multipolar global economy. To address these challenges, Schectman suggests that the U.S. needs to reassess its financial strategies and rebuild trust with its global partners, emphasizing the importance of stability and reliability in maintaining its economic leadership.
My view of the markets right now, in essence, is that we are really kind of at a crossroads. We're near a Rubicon, and I guess we can start by, since you brought up oil, to me that's really the linchpin of everything that's happening. I ask people often, what makes the dollar the world reserve currency, and very few people know the answer to that question. And right after World War II, we signed an agreement called the Bretton Woods Agreement, where we became the world reserve currency, taking over for the pound sterling. And at the time, the promise was to other governments, hey, we will honor a fixed rate of gold at $35 an ounce. So you take our dollars, and anytime you want to exchange them into gold, it'll be at $35 an ounce, fixed. And it was that way until 1971, when President de Gaulle from France largely realized that we were printing more dollars than we had gold backing it in Fort Knox, the Treasury, and he sent warships over to New York Harbor filled with dollars, saying, give us our dollars, you're creating more money to fund the Vietnam War, we want our gold. And we did. We gave him largely what he wanted, and at that point, Nixon closed the gold window, because within a matter of weeks or less, all of the gold would have been gone. So he went back on our promise. The dollar was backed by nothing at that point. When it was a few years later in 1973 or 1974 rather, that In fact, it will be 50 years in a few days, 5 days, I believe it's 50 years, that we signed, 50 years ago, we signed the Petro agreement, Kissinger did, with the Saudis. And the agreement was, we will protect you, and for that protection, you and OPEC will value oil in dollars globally, and the proceeds or any excess will go into U.S. treasuries. Recycle your excess into treasuries. And it's been that way for 50 years. And it has created a synthetic demand for the dollar where every single country in the world has had to stockpile dollars. And I think that trend is nearing an end. And the ramifications of this, I believe, is being vastly underestimated by the public, by the elite, by the economists, by everybody. And a lot of things have happened over the last couple of years that is pushing this trend, accelerating it to the point where I think we are very, very close to ultimately losing the petro status. You could argue we've already lost our hegemony. We have not lost our supremacy, but we have lost our hegemony. And when you realize that the one thing that makes the dollar really is our relationship with Saudi Arabia, probably the dumbest thing that you could do would be to sign an executive order to go green. And that is exactly what Biden did when he came into office. He signed an executive order to go green. But I think it's also relevant to note that the lead economic advisor for the United States government is a bonehead named Jared Bernstein. And a lot of people have seen his interview on Twitter recently, where he was trying to explain how the U.S. sells bonds and uses the proceeds to fund its debt. And he couldn't even get 3 words out of his mouth. That was really embarrassing. But this is a man whose main thesis is to lose the dollar's reserve status, that he's written reports on it called Dethrone King Dollar, picked up in the New York Times. When Trump slapped tariffs on China, he said, great, we'll lose our reserve status now, hopefully. That was picked up in the Washington Post. He's the lead economic advisor to the U.S. government. So if indeed you do want to lose the petro status because it creates distortions and economic imbalances, as he claims, the first thing you would do would be to say to the Saudis, hey guys, thanks for the memories, it's been great. So much so that the Crown Prince of Saudi Arabia recently came out and said, China was our most important trading partner in 2023 and will be for the next 50 years. Those numbers were chosen, or those words were chosen very specifically. In 5 days, it marks the 50-year anniversary of our petrodollar status. But we're going green, right?
Andy Schectman concludes his analysis by delving into the implications of losing the U.S. dollar's reserve currency status. He argues that the shift towards gold and other commodities is not just a temporary trend, but a fundamental change in the global financial landscape. This shift is driven by a loss of confidence in the U.S. dollar, exacerbated by the country's massive debt, questionable economic policies, and geopolitical actions. Schectman highlights the historical context of the dollar's dominance. After World War II, the Bretton Woods Agreement established the U.S. dollar as the world's reserve currency, backed by gold. This system worked well until the U.S. began printing more money than it had gold to back, leading President Nixon to end the gold standard in 1971. This decision unmoored the dollar from any tangible asset, relying instead on the strength and stability of the U.S. economy. The petrodollar system, established in the early 1970s, created a synthetic demand for the dollar by ensuring that global oil transactions were conducted in dollars. This arrangement has been a cornerstone of U.S. economic power for the past 50 years. However, Schectman argues that this system is now under significant threat. The U.S.'s push for green energy policies, coupled with its aggressive use of sanctions and financial weaponization, has led oil-producing nations to seek alternatives. Schectman points to Saudi Arabia's recent actions as a clear indication of this shift. The country's move to join the Shanghai Cooperation Organization and BRICS, along with its openness to accepting other currencies for oil, signals a significant move away from the dollar-dominated system. This shift is part of a broader trend of de-dollarization, where countries are reducing their reliance on the U.S. dollar and increasing their holdings of gold and other commodities. The implications of this trend are profound. As more countries move away from the dollar, the demand for U.S. treasuries will decline, leading to higher interest rates and increased borrowing costs for the U.S. government. This could exacerbate the already massive debt burden, leading to further economic instability. Additionally, the loss of the dollar's reserve currency status would reduce the U.S.'s ability to influence global financial markets and impose economic sanctions. Schectman also discusses the domestic implications of these global shifts. He argues that the U.S. is facing significant internal challenges, including questions about the fairness of its electoral process, the integrity of its judicial system, and the overall stability of its economy. These issues, combined with the loss of global trust, are leading to a decline in the U.S.'s influence and standing in the world. The move towards gold and other commodities is driven by a desire for stability and security. Gold, in particular, is seen as a safe haven asset that lacks the counterparty risk associated with fiat currencies and debt instruments. This trend is not limited to central banks. Private investors are also increasingly turning to gold as a hedge against economic uncertainty and inflation. Schectman emphasizes the importance of understanding these global shifts and adjusting investment strategies accordingly. He argues that the mainstream financial media often fails to adequately cover these trends, leaving many investors unprepared for the potential changes in the financial landscape. By recognizing the move towards gold and commodities, investors can better protect their wealth and navigate the uncertain economic environment. In conclusion, Andy Schectman provides a thorough and insightful analysis of the current state of the global financial system. He argues that the U.S.'s financial policies, coupled with its massive debt burden and geopolitical actions, are driving a global shift towards gold and commodities. This trend reflects a broader loss of confidence in the U.S. dollar and a move towards a more diversified and multipolar global economy. Schectman's insights underscore the importance of understanding these trends and the need for both nations and individuals to reassess their financial strategies. As the world moves towards a more stable and secure financial system, gold and other commodities are likely to play an increasingly central role in global finance. If you want to stay most up-to-date on the silver and gold markets, make sure to subscribe to my daily 5-minute silver and gold newsletter. It provides the latest expert insights, breaking news, market trends, and investment strategies, all in a concise format. Click the first link in the description to join thousands of others and enhance your investment knowledge right now. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. Your support helps me stay motivated to bring more valuable content to you. See you in the next video.